that should be turning around now. So yeah. So right now, I would rather just take my 400, $500. But just for example's sake, if I did go down to like a 1 minute chart, let me get so my stop would go below this first breakout, this first at the top of that first candle, and that's going to give me 15 points. So that's still going to be a scalp trade, but I waited for the candle to form. So the point I'm making on as a learning lesson for you is let's wait for the candles to finish forming before we make our decision on the stop. If it's not going to be based on like a moving average or something, um, I would say we got to wait until the candle finishes forming, then make the stop decision. Because when you see breakouts like that, you're going to see the pullback. You wait for that pullback, and then when it turns around and goes back down, you make that decision on the stop. If you don't wait for that price action, you're not going to know what level it'll test. Does that make sense? So that no, that's okay. I was gonna say that's the difference. You literally what we just said is the difference between your scalp trade and taking a runner, taking 1,000 and taking a 100 point ride. So you take a 20 point ride, uh, and take your money, which is good. $200 on two contracts, not a big deal, not bad at all. But right now, if I'd done the same thing that you did earlier, right? Well, this candle didn't pull that yet. This candle didn't pull back that far, but I'd been stopped out at $500, 400, maybe $400 if I did the same thing. So right now I did, and I pulled it down to the top of that last candle. And realistically, what I'm going to use right now is this moving average uh, to get my stop because we got another candle that just formed that gives me a resistance level. So now, so now I'm locking in. Now I've locked in $600, but I'll take this runner down to maybe $800, um, maybe 1,000. We're looking at a spot down around the 321 level. Oh, you just called that, didn't you? You said 321 was probably the call. I think you did say that. So, well, anytime I get over 800, maybe $750, I'm going to take that money. $1,000 to me is my daily paycheck. If I don't make $1,000 a day, then I'm not doing what I'm supposed to be doing. But so usually I take very few trades after I hit that $1,000 mark. This morning I had stuff going on, so I took one trade, walked away, didn't get my $1,000. Now I'm obviously about to hit that $1,000 mark. So what I'd probably actually do right now is safe. Well, no, we're probably close to the turnaround. I would safeten up my trade, and I can do one or two things at being up $800. I can take one off. I'll just go ahead and do that for good trade management. We'll just take a contract off and let the rest of my profits ride. So good trade management there. Take one contract off and let the other ones ride. And I think realistically, where my stop is again, I'm sitting right above the candle. I'm on 2 minute chart, so previous 2 minute candle still has me 44 points to the good. So I'm still locking in um, another uh, another couple $100 on top of the 400 I just took. So I'm guaranteeing myself $600 in this trade no matter what. And I'm gonna leave it on. I'm actually, I'll leave it. Well, when the institutions want to push the market up so people can get out of positions, there's nothing you can do to help that. And that's all that happened today. Is we had if I go back to my 1 hour chart, all I see today is institutions pushing up price so that people can get out. And let's just take the past 5 hours. What's really happened in the past 5 hours? We've seen a sideways market. People not buy. You know, 200 point swings. And so when we get swings like that, institutions are getting out, or they've pushed the market to the point where, okay, now our clients can make decisions, or now we can make a decision. Do we want to unload our position? Is it profit taking that happened? So when you expect a bloodbath and see this, a lot of times it's profit taking. People are just out there taking profits, and there's again, there's nothing we can do about it except for follow what the institutions say. But I'm happy with it, happy with it going either way. But realistically, what we're seeing, if you're looking at my analysis only, is that we got it pushed down to we got price pushed down to a previous indecision level, and if you remember some of the things that we talked about before, if you go back to, I'm just looking at the 1 hour chart right now, but if you go back to say like the 5th of October, we had price get pushed down, 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 down. But in that price push down, there was a lot of sideways movement, um, especially during, let me look at real trading hours. So we had indecision during real trading hours at pretty much where the price turned around today. So that just to go back to where we are, you looking at what I'm looking at right now? Right. You could put it that way. That's not the language I would use, but yeah. Yep. Yeah. That's kind of what we saw, because in this area between, if you're looking at the hour of the candle, you had a rally, you had a base off at the top on the 5th, you had a rally on the 5th, base off at the top on the hour of the candles, and then a drop on the 5th, and then another base later that day on the 5th, and another drop. So between that rally, that base, that drop, and that base, somewhere in that area, there was a ton of indecision. There was a ton of what do we do here? And so go back to the lessons we talked about earlier, is that those areas are going to be your entries. Get back to our original conversation: entries and exit areas. Those are the areas that you can make decisions on, because those are high probability zones that price will make. I'm about to get stopped out of this trade. I'm going to get stopped out on purpose so I can take my money. But those areas become really, really, really high probability trade areas that give people the ability to make decisions. You just have to know what decision to make in that area. So, for instance, today, that area became an area where the institutions decided to take profits, pushing the market up. And that would be my analysis of where we're at right now and why we've seen what we've seen today.